Marine insurance covers risk arising from a marine adventure. It covers the loss or damage of ship, cargo, terminals, and any transport on cargo by which property is transferred, acquired, or held between the points of origin and final destination. According to the Insurance Act 1938, 230/A, marine insurance business means the business of effecting contracts of insurance upon vessels of any description, including cargoes, freights, and other interest. According to M.N. Mishra, marine insurance has been defined as a contract between insurers and insured, whereby the insurer undertakes to indemnify the insured in a manner and to the interest thereby agreed against marine losses incident to marine adventure. Finally, we can say that a contract of marine insurance is a contract of indemnification whereby the insurer undertakes to indemnify the insured at a given contingency. Classification of marine insurance. The main classes of marine insurance are given below. Hull ship insurance. It covers both ships and its apparatus, as equipment such as fuel, tools, furniture, machinery, etc. The status of marine insurance is mainly taken out by the owner of the ship in order to avoid any loss to the ship in case of mishap occurring. Cargo insurance. Cargo insurance specially caters to the cargo of the ship and also pertains to the belongings of a ship whatever. It may be written under a single risk policy. It covers the transported like merchandise, property, etc. Freight insurance. Freight insurance covers for the loss of freight if the goods are safely shipped to the destination port. The owner of goods will have to pay freight charges, but if the ship faces any damages or losses, the ship company will be at a loss. This type of marine insurance solves the problem of companies losing money because of accident occurring. Liability insurance. Liability insurance is the insurance which is utilized when the insured suffers due to liability of the other party. This liability may be caused by the risks such as collision of a ship or any other similar causes, such as being captured by pirates, cyclones, etc. that may take place in oil. Importance of marine insurance. Protection against financial losses, extension of foreign trade, increase of investment facilities, increase of business efficiency, increase of employment facilities, minimization of loss. Different classes of policies are used in marine insurance. These are follows: WAC policies, time policies, mixed policies, health insurance, ambulance insurance, floating insurance. WAC policies, the policy is used to cover a particular way from one port to another and from one place to another. The policy mentions the port of departure at the port destination between which the risks are generally undertaken. It is most used for cargo insurance or freight insurance. Time policies. Under the policy, the subject matter is insured for a definite period of time, like from 6 a.m. from 1st January 1976 to 6 a.m. from 1st January 1977. Time policies is generally taken for only 1 year for 12 months. This policy is mainly used for hull insurance, other cargo insurance, mixed policies. This combination of WAC policy and time policy is very beneficial to hull as well as cargo insurance. Marine insurance. At the commencement of the policy, the value of the subject matter is determined. Under this policy, the value of loss to be compensated is fixed and remains constant throughout the risk. The value of subject matter is equal between the insurer and the insured at the time of taking the insurance. It is also called insured coverage breakdown. Unbilled insurance. When the value of the policy is not determined at the time of commencement of the policy, it is called an unbilled policy. If any accident occurs, the subject matter is held in accordance with the fair market value of the time and determine amount of loss to be compensated. Floating insurance. Floating policy is taken for a relatively large sum by the regular supply of goods. It covers several shipments which are declared afterwards along with other particulars. With each declaration, the amount will be reduced till it is partially destroyed, that is called partial loss. Instead, the loss is accidental and it is not intentional. The loss should be at the particular subject matter only. General loss, where the loss is caused by extraordinary expenditure to considering cost in the time of peril for the purpose of presenting the property materials in a common venture, that is called general loss. Perils, moral causes of perils. Natural causes of perils are ice, cool, cyclone, storm, fog, collision with arc. Perils of sea. If any incident occurs within the sea, that is called perils of sea. This loss refers to for sheer experience of the sea. The insurance is liable for perils of sea, not perils of sea. As like this peril of sea means occurs within the ice, this is called perils of ice. It occurs in the hill, called if perils of hill. If this occurs in cyclone, called perils of cyclone. If occurs for storm, it's called perils of storm. And if occurs fog in winter morning or in the session, called perils of fog. Moral causes of perils. Barratry means every wrongful act which is willfully committed by the master or king to that which reduces the amount of fire. In all times, fire was the main cause of peril, but in present it is under control to get resistant. Damage resulting from the fire is known as avoided under fair perils. Man of war is a military action for the purpose of defense or matters of movement of the city. The losses of cargo in ship may be caused by the enemies, which includes many things. Pirates, recoverers, and thieves. The perils on account of pirates, robbers, thieves are common in olden times, but it has been reduced considerably these days. Sedition. Sedition means one trying to cargo or for the lightening or leaving of the ship for common safety. According to Page Molly, sedition means to throw cargo from the ship into the sea to make the ship lighter. হইছে আপনার নাম গুলো আচ্ছা কত লাস্ট ক্লাসে গুলো দিবেন এটা আজকে লাগবে না